Welcome to a short summary of our quarterly economic update for September. A really important part of our ongoing service is to continue your education, and one of the best ways that we do this is via our quarterly economic update. So with me today is Will Douglas, our client advisor at Morgans. And Will, could you just explain what went really well since the last quarterly economic update?
Great, Justin. So we've had two big victories. The first was, for the last 3 quarters, we've been coaching clients to move to the high margin fixed interest notes. So these notes had margins of around 5% plus, and they were earning yields between 6 and 7%. We positioned clients in these because we knew they would start to capture the premium pricing in the market, and we've seen that now. All these notes are trading between $104 and $106. So clients' returns are going to show good capital growth in the area of fixed interest, even though we don't expect that, and really high yields. The second great victory we had is we had noted to clients that the larger stocks on the Australian market were getting very slow revenue and very slow profit. And we actually kept their focus on the smaller to more medium-sized Australian enterprises. And to that effect, we took the Contango listed investment company. So just within the last quarter, that's come up about 22% for clients. So a fantastic outcome, all from our last quarterly update.
Yeah, it's been great. The key message in this quarterly update is to expect some volatility. Can you perhaps just talk through what the drivers will be of that volatility and what clients can do to position themselves for that volatility that could be coming?
Absolutely. So this is all going to be about rising interest rates in the US. At the moment in the market, by the way that various interest rate sensitive instruments have been trading, we can tell the market is not pricing in any interest rate rises from the US out to about March next year. This is even despite Janet Yellen, federal chairperson of the US Federal Reserve, saying countless times and even providing a schedule of interest rate rises that they will do. So we think these interest rate rises are imminent, and as they come out, that will present a shock to the market. And what we'll see is we'll see the traded price of shares around the world fall backwards for a period of time. We call this a correction in the market. It's quite natural. How are we preparing clients for this? One is just the education of expect this to come and why. The second thing we're doing is we're holding higher cash levels than we normally would otherwise for equity purchases because we think some better bargain pricing is coming in around October.
Fantastic. Will, could you also talk about being cautious of what the media are putting out there in terms of their unbalanced or perhaps even biased articles? Do you mind giving us a quick few examples of where your advice has come in handy for investors perhaps over the last 6 months?
Yeah, fantastic, Justin. Look, we do see a lot of negative articles coming out in the media about fixed interest notes. They get a lot of criticism, and our investment philosophy is always every investment has the good, the bad, and the ugly, the old Western theme. And we always present that argument because it is always a balanced argument, and we make investments where we feel that the good outweighs the bad and the ugly that might come through. What's very disappointing with a lot of these media articles and criticisms is they just focus on the bad and the ugly. That's the only story they deliver. Then they walk away and make a recommendation that people don't make these investments. And we saw some very strong articles about the recent Westpac notes and National Australia Bank notes that we have for clients. The end result here is we recommended that clients ignore these articles and recognise that they weren't balanced arguments. We put out a lot of the good that comes from these notes, the high yield and the security of owning that in a big top 4 Australian bank. And the actual investment result has been that already in only a 2-month period, these notes are trading up 3.5%, an extremely strong endorsement by the market and a great win for clients.
Absolutely. Will, I always find your quarterly economic updates to be really informative and dare I say it, quite entertaining. I think there's a tremendous amount of information in there for clients that they can take clear direction on. So we really encourage clients to come to the quarterly economic update, listen to the recordings and participate at least just once, just to continue their education and to really understand what are the cause and effects in their portfolios and what we're doing proactively to help monitor clients' portfolios and service them that much better. So thanks for joining me today, Will. And for clients who would like to watch the full update of the economic update, please click on the link below and you can listen to the recording or the podcast.